Good afternoon, ladies and gentlemen, and welcome to the AFC Energy PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Given the significant attendance on today's call, questions are encouraged, but the company may not be in a position to answer every question it receives during the meeting itself. To submit your questions, just simply type in your question at any time using the Q&A tab situated on the right-hand corner of your screen. Type in your question and press send. Before we begin, we would like to submit the following poll, and I'm sure the company would be most grateful for your participation. I'd now like to hand over to Adam Bond, CEO. Good afternoon.
Good afternoon, Mark, and good afternoon, everyone on the call. We've already received a number of very helpful questions, which hopefully we can address throughout this presentation today. One of which is around communications of the company, and hopefully this is the start of a wider communication strategy with investors, with particularly retail investors. Try and give you greater access to some of the thinking around strategy, around the company's progress, and hopefully you find this useful today. Again, pleasure to meet you all. This is our first one of these Investor Meet company presentations, and the purpose of this is really to go through the annual results for the year ended 31 October 2022. The question that we get asked a lot is what is AFC? What is its purpose? And one of the things the themes you'll find relevant in this presentation is that construction industry, temporary power, is a key theme, is a key focus for us at this point in time. And you can see from this graphic, which is sort of an introductory positioning of the story, is if you look at the UK construction market as a standalone industry, the UK construction market today consumes approximately 18.3 million barrels of diesel per annum. That's approximately 5.5% of the entire North Sea UK oil production. Now, that converts into approximately 8.1 billion kilograms of CO2 produced. We all hear regularly on the news and in the media that net zero is a core part of our political will, of our social will. And so if we do believe in achieving net zero and that we're on that journey, then that entire 18.3 million barrels of diesel per year needs to be displaced with something else. And that's where the AFC Energy fuel cell or hydrogen generator platform starts to play a key role. You can see here that AFC is focused on utilizing hydrogen. I'm mindful there's a lot of people on this call who may not be familiar with the AFC story as others, but utilizing hydrogen as our key feedstock, there is no CO2 in that, and our net emissions from that is basically water and power. So that is the AFC purpose. That is the markets in which we're aiming to focus on, and if you look at that in a holistic way, globally, the diesel generator market today is valued between 20 and 25 billion US dollars a year. So it's a fairly big market in which we can look to address. The year that we've just completed, we've defined as a year of unprecedented progress. Many of you will have attended various AGMs in the past, and you will have heard us speak of concepts around the power tower, concepts around the new liquid-cooled ABB technology, as we're calling it, and concepts around the ammonia cracker and fuel conversion technology. Well, today, this year, we can say that in the space of 12 months, or maybe 18 months in some cases, we've managed to successfully deliver not only technologies in the lab, but we've actually put those technologies into the field, not just in the field, but in the hands of customers, and not just in the hands of customers, but customers who are paying to rent those systems. So we're now starting a journey of revenue generation from our technology, whereby that technology was actually developed over the course of about 12 to 18 months. Those are the types of, that's the type of progress that we've been able to make as a result of successful fundraisers made in prior years. This is the type of progress that we're starting to see with the industry and the way it's evolving in adopting some of the technologies that we're taking to market today. Of course, with systems in the market and the successful deployments we've seen with companies like Acciona, with companies like Kia and Keltbray and Mace and others, we are now starting to see a growing pipeline of projects in that market. And we'll be talking a little bit more around the pipeline of opportunities that exist, particularly with a focus on construction today. Secondly, we've managed to achieve a successful validation of a new technology that did not exist 12 months ago, which we're calling our S Plus series, or our liquid-cooled fuel cell technology. We delivered 100 kilowatts worth of stacks into with ABB in witnessing the demonstration, highlighting the technology's not only operability, but also that it's delivered against all of the key milestones set out in our contract with ABB. And that was delivered not only to the full specification of the contract, but also delivered on time in October last year and tested over the validation period of that contract. Such was the success of that technology that ABB decided to invest a further £2 million into AFC's equity post year end. During the year, we've successfully delivered on our Season 2 Extreme E. For those who have followed the AFC story for a while, you'll be familiar with the Extreme E series. We successfully delivered Season 1, followed up by Season 2. We've decided not to proceed with Season 3, which is currently ongoing. But during the course of Season 1 and Season 2, we were successful in delivering clean energy to charge all of the Extreme E race vehicles at every race that we attended over the course of those 2 years. Halfway through the year, one question we do get asked quite a lot, and a question that came through in some of the pre-submitted questions from you all, is that halfway through the year we noticed there was a change in the sponsorship, if you like, of the Extreme E equipment. And quite simply, that was as a result of a commercial arrangement reached between Extreme E and ANOA, which is a subsidiary of NEOM in Saudi Arabia, whereby AFC forwent some of its advertising space in return for an increase in cash received. So a commercial transaction that was undertaken during the course of last year. So during the year, I guess one of the things that may have become new to a lot of you was the introduction of our new ammonia cracking platform. And we're going to spend a bit more time later in this presentation talking about ammonia and the technology that we've been developing in that sector as well. So on that basis, I will hand over to our new CFO, Peter Dixon-Clark, who will take us through some of the numbers.
Great, thanks, Adam. Hi, everybody. Great to meet you, and mindful of the comments we've had about more, external communication, and as Adam says, this is a very good step in that direction. So look, very briefly, I started just before Christmas. Big believer in the renewable space. I've been working renewables for a number of years, and when I got called about this job, it was a very easy decision. Big believer in hydrogen. I have spent time in oil and gas, and I can see all the read acrosses, and I can see the opportunities for scale, and I can see, the macro opportunities. So not a difficult decision about joining AFC, and delighted to be here and talking to you. So what I'll do is I'll take you through the numbers. This is a results presentation, but I will try to place them in context and particularly talk about, what has happened, but most importantly, what it means for the future, because it's the future that we're all most interested in. So very exciting space, lots and lots of opportunities, but obviously for a company like AFC, we need to focus, we need to deliver on those opportunities. And delivering on opportunities is how you drive the share price, and how we intend to see it marching back up to where we think it should be. So we've identified 3 value streams, and those value streams align with our products, and I'll just take you through them very briefly. At the top of this picture, we've got the green value stream, which is our air-cooled fuel cell. So that's the lower density fuel cell. It's already generating revenue, as Adam says. It's generating rental revenue, I beg your pardon. And of course, the next big milestone is when it starts generating sales revenue. And we'll come to that when Adam talks about the business model. But we're already making good progress there. It's not a binary process. You don't start generating revenue and stop investing. The investment continues for some time. And then in chronological terms, fast on the heels of the air-cooled, we've got the liquid-cooled. It's liquid-cooled because it's more energy dense, which means there's an exothermic reaction. There's more heat that needs to be dispersed. And the liquid cooled is essentially the ABB product that we're developing in conjunction with ABB. So ABB's provided the lion's share of the development funding, but it's really important to stress ABB do not get to own the intellectual property that's generated, that stays with us, nor do they have an exclusive over future distribution. Clearly, they have fabulous distribution channels themselves, and there are opportunities there. But equally, if and when we develop our own channels, we are able to do so. And our third value stream is fuel conversion. And fuel conversion is where, we're really into the sort of macro picture. If you look at a map of the world, and Adam will come to it, we're going to end up with countries or regions that create, they're energy exporters, and other regions will be energy importers. And so it's all about how do you move energy from one place to the next, and the logical answer the emergent front runner is ammonia. So fuel conversion, we know how to convert other fuels, but ammonia's, as I say, is the front runner. And so in terms of revenue, we've already generating revenue with the air cooled. The liquid cooled will follow next year when we complete our delivery to ABB, and then we would expect the fuel conversion to follow after that. So you get a nice steady build up of the revenue, and then obviously as more revenue comes on stream, the existing products really start to gain momentum, and that's where you see the oft used term of the hockey stick. So that's what we're expecting to happen over the next three years, and then it really takes off from there. So that's the context. So the numbers, last year, 600,000 of revenue, predominantly Extreme E. So a large part of 2003 will be about replacing the Extreme E revenue with rental revenue on the power towers. That deferred revenue there of the 1.6 million, and deferred revenue, just for anyone who's sort of not comfortable with it, that's where we've already received the cash, but we haven't recognized the revenue. So we've received 2 million from ABB. We've set, and I'll come to it, we've set 600,000 of warrants against that. So of that 1.6, 1.4 relates to ABB, and I'll cover ABB in detail in a minute. 40 million of cash is a great place to be for a company of this size. So we're really pleased with that. 16 million of loss at the moment, as we transition from research to development to commercial, we're expensing pretty much everything. So that expense is a proxy for our cash usage, and I'll talk about that as well. And then finally, because we are doing a lot of research and development, which is the basis for how we've been able to move so quickly in the last 12 months, we've generated an R&D tax credit, which is essentially a cash refund from the government of £3 million. So those are the highlights. And I think that takes us neatly into ABB. Now, the important thing with ABB, we signed an agreement with them back in November 2011. 21. Thank you. 21. Yes. And then we've revised it by mutual consent in March of this year, and we announced that. So the most important thing to underline is the value has stayed the same. The overall sort of size of the prize is still £4 million. In fact, the size of the prize, if you like, has increased, because as well as the £4 million of sort of headline cash into the business, we've negotiated a follow-on options. And so the original contract was for a sale of a single unit. The new contract is also for the sale of an existing unit with the option to purchase a further 9 and an incentive to do so. And the way we've incentivized ABB to sort of follow their money, if you like, is they earn that deferred revenue that I was talking about earlier. They earn that over the period of the sales. If they decide not to buy, the cash is non-refundable. So that accrues to the value of the company either way. But that's the structure we've set up, and ABB are, as I say, incentivized to keep buying and keep working with us. So the maximum possible revenue has obviously increased. We've gone from the sale of 1 unit to 10, and hopefully many more over time. The 1.4 I talked about, that's a bit of an accounting sort of nicety, but essentially on the same day we signed the sale and development agreement, we granted some warrants, and we valued those warrants at 600,000. So 2 million less 600,000 is 1.4. There's nothing more to it than that. We've issued equity of 2 million, and by issuing the equity of 2 million, we accelerated the receipt of the 4 million. So whereas under the old contract, we've received 2 million, we'd still be waiting for the next two, and until everything was delivered. We now already have that 4 million in our bank account. So that's essentially what's happened. And the point with the options is, a company that's growing like ours, never underestimate the value of a pipeline. It gives us some real sway with our supply chain. If we look to outsource any of our manufacturing, it gives us some real credibility there. So there's real accrued value in those options. Thank you. And this is the final slide. So this is really, how do the numbers back up the pace of movement Adam's been talking about? Well, in 2021, we spent 8 million pounds, of which only 3, so about a third, related to R&D qualifying expense. Come 2022, we tripled the amount we'd spent on R&D from 3 to 9 million, and that was over half of our expenditure. So we've become far more focused on our engineering teams and our chemists, our research and development, and we're turning that into value. The beauty with being so focused on R&D is, of course, we get the tax credit. So of that 9 million of investment, which clearly we're looking to, get multiples of value from, we will get a 3 million refund. So it will cost us 6 million, but we're looking to generate a great deal more value than that. So those are the numbers. Those are certainly the highlights. If I could hand back to Adam and go from there.
Thank you, Peter. So we're going to break this down into a couple of segments. One is on the fuel cell power generators, and the second is on the actual fuel conversion technology, such as the cracker. Many of you who have followed AFC will be familiar with this slide. It covers off on a number of our addressable markets where we're focusing the generator technology. I've said before that the real big markets in terms of the scale and size of opportunity really probably reside in sectors like maritime, shipping, data centers, and the like. However, the barriers to entry are higher. The ability to have a shipbuilder integrate your fuel cell and or cracker onto a ship, it takes longer. You have to buy a lot more operating evidence, if you like, to support the operation of the fuel cell over longer periods, because those investments in ships are 40-year lives. Whereas the barriers to entry into sectors like construction and temporary power and EV charging are much lower for shorter term deployment potential. So today we're focusing on really the top line and particularly with a focus on construction. With that focus, I mentioned at the beginning of this presentation some of the usage of diesel in the UK construction industry, and you can see some of the statistics there. I think one thing that we're starting to see a lot more is the industry, being the construction industry, recognizing that the need to convert or transition from diesel is probably sooner than they first thought. We are now starting to see government procurements, which might be a HS2 project, it might be something quite high profile, it could be just a simple government building. But the procurement documentation is now requiring up to, say, 20-30% of the weighting of that procurement towards the green credentials of the offering of the contractor. I was speaking to a CEO of one of the large plant hire businesses in the UK a couple of weeks back, and he was saying that of the tenders that they're now supporting, there is an increasing demand for technologies like our fuel cell to support the bid teams from the construction groups. I think equally there is an acknowledgement that this is a premium priced product. We don't have to meet the cost of diesel to be viable in the market today. It is a premium priced product. And I think if you look at the constructors in particular, a number of those constructors, particularly the listed ones, are now being held to account by their shareholder base, who are asking for transparency over their environmental, social, and governance criteria and that part of their business, which is the ESG emissions. So I guess if you put that together and ask, well, what is the timeline for that transition, you can see at the bottom there the Construction Leadership Council, which I don't know if you're familiar with them, but this is a group of organizations representing the construction industry. I believe they're led by the CEO of Mason Atkins. They are basically consulting on the zero diesel site roadmap. And circled in red there, you can see one of the consultation points is a target of 500 companies in the UK signing up by the end of this year to displace diesel generators on sites by 2025. Now, that is a very, very aggressive target. Whether that target is in fact met or is deferred a year or two, the message is that the industry is no longer setting targets at 2050, 2040, but rather these targets are far more short term, in this case 2025, 2026, 2027. So that hockey stick, if you like, of growth that we expect to see will be driven in large part by the industry's own desire to be transitioning from diesel in the very near term. One question we get asked a lot is just an understanding of the business model of AFC in the light of that construction industry. And there are three key players in this space. You've got the generator manufacturers. You could add into that Caterpillar, Cummins, companies of that nature. You've got the plant hire businesses, of which I've listed just three, but there are many, who are actively buying generators from the manufacturer and then on letting or renting those to the construction companies, of which I've listed several there. Of that list, we haven't let any or rented any systems to Balfour Beatty, but all the others we have. The business model that we expect to see is that AFC will start selling our systems to plant hire businesses. But in order for the plant hire businesses to start wanting to buy our systems, they need to understand the demand from the construction industry. And so what we've been doing over the last, since August of last year and are continuing to do today, is we're starting to see deployments into the construction market. The construction market is getting comfortable with the technology. They're getting comfortable with the fueling strategy around hydrogen. They're getting comfortable of the operability of our system. One of the challenges that we've had originally was, we're giving the industry a piece of technology that doesn't look like a generator, and therefore that in itself can be a reason sort of site operators don't want to proceed with a change in technology. So we've been working with the industry. We're now starting to see follow-on orders. We've seen Keltbray extend their original deployment by 6 months. We've seen a follow-on order from Acciona. And we're seeing quite a few further progressions in the industry. We have on very good record that those construction company CEOs and sustainability managers are now in fact engaging with the plant hire businesses. How do we know that? Because the plant hire businesses are now starting to engage with AFC. And so the investment in time, whilst revenues on short-term rentals of 10 kilowatt power towers might be nominal in the scheme of things, it's about driving a pipeline of opportunities that will result eventually in sales of fuel cells to plant hire businesses of varying sizes, and that therefore will then generate the accelerated growth in revenue over the next year or two. So this is the model that we've been adopting, and so far has been quite successful in driving the outcomes that we're seeking to achieve. We've got a number of power towers in the market. You can see some of the ones there that we've already announced: Acciona, Keltbray, Mace, Dragados, Kia, and more recently we have a couple of others with Vinci, and as of this week we have our first multiple system deployment with Colas Rail, and you can see an image of the two fuel cell power towers side by side running the part of the Colas Rail construction site in Gloucester this week and for the next several weeks. I will just defer back to Vinci for one minute, and I do also say that this is not an extensive, complete list of all of the deployments. There have been a number of other deployments that we've delivered into, some of which prefer not to be quoted, and we don't expect to be making announcements on every deployment that we make. However, Vinci is an important one on the basis that Vinci is by revenue, I believe, the second largest construction group in the world. And a couple of weeks ago, we had the opportunity by invitation to present to the senior executive team of 150 people in Silverstone. And you can see a photograph of the fuel cell that was on site at Silverstone on the day. But the interesting factor was that at that event, we managed to speak to 150 of the senior executives of Vinci UK. And from that, we're starting to see a really interesting pipeline of opportunities starting to develop. And Vinci being a global organization, there's clearly opportunities to extend that overseas as well. So again, the strategy of early deployments into the market, seeding that market, establishing the credibility of the technology is now starting to see follow-on results. At a construction level, there's different ways you can provide power into a construction market, and we wanted to demonstrate with our first year of deployments as many of those different applications as possible. We've, during the course of the last 6 to 12 months, we've seen our fuel cells or hydrogen generators charge electric vehicles. Speaking to companies like Vinci, they've already invested a significant amount in the decarbonisation of their fleet of vehicles. So if a company like Vinci has 1,000 vehicles and let's say 500 of them have been converted to EVs, or not converted, but they've been transitioned to EVs, then those vehicles, there's a risk that when you drive to the site of the construction project, that you have nothing to charge your vehicle except the diesel generator. So using our fuel cell to power or charge the EVs on site is one of those use cases. Powering porta cabins, powering lighting rigs. We've charged electric JCB telehandlers in London. We've provided a lot of different elements of powering across the construction roadmap, if you like. There's an interesting little statistic on the crane you can see there. We've not powered a crane yet. We're in discussions with a few crane operators, but a crane will traditionally have a 200 kilowatt or kVA generator at the bottom of it. But at night time, when the operator goes home, you still have that little light at the top of the crane that is requiring power. So overnight, that 250 kVA generator is reduced in the amount of power it produces, but it can only go down to, let's say, 30 kilowatts or kVA, which means you're still using approximately the amount of power needed to run 60 UK homes to run a little light on top of a crane. That inefficiency is costing the constructor not only money because they're burning diesel to run that light, but also the emissions associated with that inefficient operation. And so where you look at construction industries wanting to reduce their carbon footprint, one of the very simple ways is to start running a crane off the back of a fuel cell rather than a generator. Because unlike the crane, the fuel cell can reduce in its power all the way down to a couple of watts, which is all that light on top of the crane needs. So in delivering the air-cooled system, which is the system used in construction, we first started to design that module in around June of 2021. We actually announced in December 2021 that we delivered the first stacks and towards delivery of the power towers, which we launched in early 2022. And then we had our first commissioning and deployment in August of 2022 to Acciona. And you can see in that scheme that in about 12 months, we delivered that technology from concept to the field. And then since that, we've continued with our field deployments up until today. Milestones for this year on that bit of technology, we're looking at material cost reductions. We've already identified ways of basically taking the current capital cost and halving it during the course of this year. We're looking at building into that a lot of the customer feedback. There's nothing better than having feedback from the customer, because when you get that feedback and you deliver on what they've sought, then you obviously grow the opportunity to sell more systems to them. We're looking at integrating batteries, delivering our 30 kilowatt system, and again, pursuing engagement with the plant hire businesses and indeed new customers during the course of the year. With regards to the liquid cooled system, the ABB system, for want of a better phrase, again, July last year, we started to design and build our first stack. That first stack was designed, built, and delivered, and then put onto test by October. Such was the accelerated nature of that development program. During the month of October, ABB were present to witness that, and then we started the validation process. They were comfortable with that validation process, which was confirmed in March of this year following on a further investment by ABB into AFC. We're now working to take that 100 kilowatts and convert that into a 200 kilowatt system. One of the questions we do get asked quite a lot from some shareholders is, we've talked about cumulative 100 kilowatts. Quite simply, you can have a stack of 100 kilowatts, you can have a stack of 50 kilowatts. If you put two 50 kilowatt stacks together and run them in parallel, you have a cumulative 100 kilowatt system. So that is the nature of what we've done with ABB. We ran multiple stacks, in this case it was two, to deliver in excess of 100 kilowatts being the targeted output. Now that platform, once it's delivered later this year, 200 kilowatts being delivered later this year, we expect to start a CE marking process. So we're doing all of the work in preparation for CE marking. For those not familiar with CE marking, it's the little certification logo on most products that you buy in the supermarket, saying that that product is certified for mass sales across Europe. And that's what we're aiming for with ABB. I'll pass over to Peter to talk through some of those platforms now.
Great, many thanks. So as Adam says, I'll talk through the platforms, but I'm very much going to continue the theme of speed of movement, responsiveness to market dynamics, and fulfilling a very real need. So the way we think about our products, Adam's talked about the stacks, and you saw a photo of a stack on the previous page. So think a bit like the layers of an onion. We start with a stack, that's our motor, that's our building block. We place a module around it, and that module contains the cooling and the balance of plant and some of the control systems that are required. And the reason I'm emphasizing that is this modular approach sets us up really well for scaling. It also gives us flexibility and versatility around how we then deploy this technology. And I'll illustrate that in a minute. So focusing on the power tower, which, as Adam says, we've got 10 of them, out there generating rental income for us, but most importantly, helping us break into the construction industry, getting the name out there, getting real kit on real construction sites, and bringing back an enormous amount of data. And so this power tower, you've got 4 modules. You can see them in the front. The air goes in the front and it goes out the back, keeps the thing cool. And that's what we delivered to Acciona. They were the first very large Spanish construction company. They were the first people we delivered to in August, which, as you'll appreciate, August in sort of central Spain is super, super hot. And so the fact our power tower was able to work under those conditions, is a real validation. So power tower was on site for 3 months, and then we sat down with Acciona and we asked, what's the feedback? And we got some fabulous feedback. Most importantly, they liked what they saw. The next thing was they wanted it to give 3 times the power output. 3 times the power output is probably the sweet spot for this. No, not probably. It is the sweet spot for the construction industry. And when it comes to displacing diesel, that's where they wanted us to pitch it. 30 kilowatts is about 50 kVA. And again, part of the feedback was, speak our language. We, the construction sector, think in kVA. When we couple one of these up with a battery, we're in that sort of 50 kVA. So again, we're being as responsive as we can be. And then the final bit of feedback, and then one more bit of feedback was, when you take a step back and you look at the actual throughput costs of a fuel cell, they were finding enormous savings relative to diesel, because a diesel generator, there's a single engine in there, and if it's it's not very good at following load. So a diesel generator has to idle, much like a normal car at the traffic lights, and you're wasting all that energy. And internal combustion engines are only about 20% efficient. Of the fuel that goes in, only 20% goes into useful work. The rest goes into heat. Fuel cells start at 50% and obviously get better. So what they noticed was that, if you look at the actual throughput of diesel, i.e. you include the idle time, you include the time the diesel's not working in its power band, in terms of hydrogen throughput costs, and remember, hydrogen is going to get cheaper and cheaper as it more and more comes on stream. And diesel's going to get more and more expensive, driven by tax credits and so on. Sorry, carbon credits, not tax credits. They felt that we were sort of between 10 and 20%, probably around the 14% mark, more expensive than diesel. So if if that's the gap we've got to cross, and it's not a big gap, and that's where we are with our first sort of iteration of this product, then that makes us very excited about the future. So what does the future look like? Well, it looks like this. As I say, instead of 10 kilowatts, Acciona asked us to output 30. So you can see 6 modules at the front, and then were you to stand the other side of that unit, you'd see another 6. That's where you get your 30 from. As they preferred the unit to look like an existing generator. So that now has a similar footprint. It's also a lot easier to move. You can see it's on a skid. You can see a forklift can pick it up. If a forklift picks up a power tower, it's fine, it works. But if it's on bumpy ground, you've got a high center of gravity. So it's not ideal. And on the right, you can see a control panel. And that control panel is super simple. And the reason we're going for simplicity in use is it's one thing talking to the sort of senior decision makers at Acciona, but we need to win the hearts and minds of the guys who are running the site. And what they want to do is they just want to get on with their job and deliver the road or deliver the building or even the tunnel. And so the more this thing looks like what they're used to, the more they know how to operate it, the less of their time it's taking, the more time they have to do, what they're paid to do. So in the space of about just over a year, we will have deployed the first power tower, tested it for 3 months, got the feedback, worked that feedback into our design cycle, and one of these units will be with Acciona before the end of this year. So that's another example of how fast we are moving and how fast we think the sector is moving, and where we anticipate the revenue build up to come from. And then we've talked a lot about the air-cooled, and rightly so, because that's the first of our 3 value streams. This is where we are with our liquid-cooled. So as I said, more energy dense. This is sized to meet the upper of the 2 power bands that the construction sector works with. So if you've got particularly if you're site constrained, rather than lining 2 or 3 generators up next to each other, you go liquid-cooled. The beauty with liquid-cooled is it also has follow-on applications for EV charging, for backup power, and ultimately for maritime. So here we've got, again, the first iteration. And remember, the liquid-cooled is behind the air-cooled in terms of development. And what we expect to see over time is the unit on the top, which is the cooling section, that will get smaller and smaller, and this thing will look more and more like a generator. And once again, it's the path of least resistance. It's working with the construction sector in a manner to which they're comfortable. And of course, the more comfortable the construction sector is in using these things, the more motivated the plant hire companies will be to buy these things from us in bulk. So again, moving from rentals to sales is where you get your other big boost in revenue. So those are the three products on the stocks. Back to Adam.
Thanks, Peter. Yes, that last product, which Peter mentioned earlier, is being funded, and so all the funding of it is being supported by ABB. We've continued to work very closely with ABB over the last few years. That we received a number of questions in advance of this presentation in regards to the ABB contract, which hopefully you understand a little bit more with the explanation provided by Peter. But we've also continued to work and grow our relationship with ABB beyond simply e-mobility. But we're now also looking at critical backup power. We're looking at maritime and other sectors. So the relationship with ABB and their shareholding position in us, which is currently 2.2%, is continuing to strengthen as we continue down the journey and continue to validate our technologies. So on the topic of flexible fuel strategy, which is moving towards ammonia crackers. Many of you will have heard the story before that AFC is one of its USPs is its interest in utilizing ammonia as a feedstock or as a fuel for carrying hydrogen. And the logic has always been that you could integrate an ammonia cracker with a fuel cell. And we've spoken about the fuel cells, the ammonia crackers that are available off the shelf, which are quite dated, quite expensive, and quite inefficient. Because at the end of the day, no one has really needed to make hydrogen, to make ammonia, to make hydrogen again, perhaps until now. You can see in this slide, which has an extract from a report that was released late last year, by McKinsey's in collaboration with the World Hydrogen Council, that the amount of hydrogen that is expected to be transported long distances, i.e. international trade, is expected to grow from around 7 million tons today up to 400 million tons over the course of the next few decades. And you can see that represented by the donuts or the circles at the bottom right of the slide. But if you break that circle down into green and orange, green being hydrogen derivatives such as ammonia, and the orange, which is more utilizing hydrogen and transporting it through pipelines, you can see there that today the percentage of the pie is dictated or dominated by hydrogen derivatives such as ammonia. And that, whilst the percentage falls over time, the actual volume grows exponentially year on year. And so what we're starting to see now is ammonia continuing to create a strong presence as a viable fuel for transporting hydrogen. And that hasn't been it has been affected very much by the Ukraine conflict that we see today, some of the geopolitical situations around that, by continuing to see ammonia as a displacement of LNG, and in particular, some of the natural gas supplies from the east. If you go to the next slide, again, an extract from that same report that McKinsey's prepared, you can see there that a large amount of the hydrogen being consumed around the world, or produced around the world, which is shown in blue on the map, is coming from countries like Saudi Arabia, from the Middle East, from the UAE, from Australia, from Chile, from North America. That's where locations where solar costs or wind costs, renewable costs are at their lowest, and you're able to make low-cost green or clean hydrogen, and then import or export that in the form of ammonia. The countries that you can see there shaded in more of an orange shade are Europe and Asia. They are the countries that will be receiving the ammonia in from those other exporting countries. And so in Europe, take that as an example, we're starting to see a significant amount of new ammonia import announcements on an almost weekly basis now. But the challenge with Europe is that they don't actually want the ammonia, they tend to want the hydrogen within the ammonia. Hence the opportunity to crack that ammonia in a way that is liberating of hydrogen and giving hydrogen a kickstart in places like Europe and Asia. You can see here some extracts from the web. All of these you can access, but you can see the caliber of companies that are now looking at importing ammonia from Canada, from Australia, from the Middle East. You've got new infrastructure being built to receive the ammonia in places like Port of Rotterdam, Brunsbüttel in Germany, by companies such as RWE, E.ON, Uniper, OCI, and others, BP in the middle. So this is becoming a very interesting sector, not so much because of its relationship to fuel cells, and in particular AFC's fuel cells, but more as a means by which the hydrogen economy is going to be enabled going forward. We've talked a lot about shipping and the fact that 45% of the world's international cargo fleet will be utilizing ammonia as its preferred feedstock, in accordance with what the International Energy Agency are predicting. And you can see some of those statistics again online. So the cracking market is projected to be now a multi-billion-dollar international market, of which there are very, very few players. And AFC has, over the last few years, been developing this cracker technology, which we launched only a matter of a few weeks ago. But that cracker technology has now been able to position itself quite well as an enabler for some of these projects that are now emerging in the global market. Importantly, the cracker, we've always talked to it in the context of fuel cells, but it's becoming a standalone product. We are able to sell crackers even if the fuel cell is not part of that solution, and that's an important value proposition that is starting to create value within AFC beyond simply just the valuation of the fuel cell. The technology within that cracker is proprietary to AFC. We own it all. We're going through a very deep and productive process at the moment around patenting of that. So we're very careful on what we disclose. But the market is now starting to see a great value proposition in that technology. And I think going forward, we are now starting to engage with some of the market leaders in the ammonia space, some of which you saw on the previous page, with regards to how AFC can partner with them to unlock the hydrogen potential of ammonia as a carrier fuel. The fuel conversion market opportunities that we're focusing on are very much looking at technologies around hydrogen refueling. Examples include European utilities who are looking at creating a network of hydrogen refuelers, but are struggling to make the economics of moving hydrogen around work. In this case, you could move ammonia around and crack the ammonia on site on a distributed basis to make standalone hydrogen refuelers. We have oil and gas groups that we're talking to who are interested in co-firing our technology or co-firing existing combined cycle gas turbines with ammonia cracking and hydrogen derived from that. Maritime, again, putting crackers on board ships to create hydrogen on board ships, integrating it with our fuel cell technology in the bottom left, integrating it with pipeline and blending it with natural gas. And something else which is interesting, becoming more interesting, I guess, is aviation. This is not necessarily refueling a plane with hydrogen derived from ammonia, but if you think of an airfield, and we mentioned Vinci owned 33, I think, airports around the world. One of those is Gatwick, you'll be familiar with. One of the observations is that a lot of the airside vehicles that are currently moving our bags around when we travel are likely to move towards a fuel cell fuel cell vehicles. So the refueling of those vehicles airside becomes an interesting proposition as well. So there's a very large market there. As Peter said, and I guess I emphasize this, the timing of revenues from these different technologies is phased in accordance with that earlier slide: air-cooled, liquid-cooled, fuel conversion. And we've said publicly in our launch announcement that we expect to start seeing revenues from the cracker technologies in particular from around 2025 onwards. That doesn't mean we can't find a partner before that who's willing to invest in the development, such as ABB, and we are having those conversations as we speak. But that is again, the trajectory of that revenue is a question that we have been asked in advance of this presentation. You can see there a couple of images of, we've talked about ammonia a lot, a methanol reformer that we've also developed over the last 12 months, which has been put in the field in Spain and has basically created hydrogen from methanol, reforming methanol, and the ammonia cracker technology there on the right-hand side in the silver canister. If you think of that silver canister, just picture that and remember that for the next slide. That's the reactor that you see on the left there. If you start putting multiple reactors into a cracker module, you then start to build the throughput of that module to create more hydrogen. And then you package it to look like a hydrogen generator system. To give you a sense of scale, that hydrogen generator system is probably going to be sized around somewhere between a washing machine size, industrial washing machine, and a fridge freezer that you might see in a home. So it's not a massive footprint, which makes it ideal for putting onto ships, but also to create modular distributed systems rather than single one-off large investments in cracker technology. Another concept that we've been working on, and this is obviously a render of that, is a refueler for trucks. And this is our last slide before we open to questions. But the types of technologies that we're looking at now are enabling networks of refueling infrastructure across Europe and elsewhere. And whilst this is obviously a render, this render was actually done for a live potential customer in Europe who is looking at this as an alternative to moving hydrogen around Europe. So lots of different opportunities. I do apologize. I said this was the last slide. We do have one more slide in terms of the outlook. But the outlook for the coming year, we're halfway through the year at the moment. You can gauge the rental revenues are going to continue and are continuing this year, including the sale of hydrogen, which we are delivering to most of our customers and partners. But the important thing for us this year, and this financial year, I mean, is that we start looking at the pipeline of contracted revenue from plant hire commitments. And that's when we start to see the revenue profile change from rental income, which is obviously on a per week or per monthly basis, to larger sale income. And we've seen that with the recent announcement with Acciona, who have now placed their first order for a 50 kVA system, which they will be paying for after an initial couple of weeks of rental. They'll then have the option to buy that. So delivery of the contracted pipeline with the plant hire businesses, that will start to see a strong uptick in revenue. Please note that signing a contract today with a plant hire business for X units will still require the units to be manufactured, and that manufacturing will then consummate the sale, which may happen towards the end of this financial year, but the revenue may well therefore be recognized in the following year. So there's a revenue recognition timing question around all of that. But what we want to try and deliver is contracted revenue pipeline that you can start to create a valuation around. The delivery of the ABB first 200 kilowatt system, we're still aiming to deliver that 200 kilowatt system this year and prepare that then for CE marking, which I mentioned earlier, which will take a period of time measured in months post delivery of that system, and we're basically preparing for CE marking as we speak. Positioning ourselves for growth in maritime and critical backup power. I don't want to underestimate the interest that we have received from some of the world's largest ship owners and shipping shipyards. There has been a tremendous amount of interest, especially around the ammonia cracker and how you can interface and integrate that with a fuel cell. That is a longer timeline. Again, the revenues are going to be recognized over a longer time period. But the positioning that we're doing at the moment is critical to positioning ourselves as a market leader in that space. And we're very confident that there will be some very, very good traction around maritime and particularly data centers over the next year or two. Manufacturing capacity and the focus of that. So as most of you will know, we have invested in some semi-automated manufacturing equipment already at AFC. We're continuing to invest in that during the course of this year. One thing we are assessing now is a preference to look at contract manufacturing so that we can scale up quicker to meet what we consider to be a fairly rapid growth in deployments over the next few years. And so with that manufacturing capacity, we don't obviously want to overinvest in a nice new shiny office today, which then is ultimately outsourced tomorrow. Of course, there is a lot of intellectual property in what we do, so that balance between manufacturing internally and protecting and maintaining that IP is fundamental to that final decision. And then around the ammonia cracker technology, the team are working on an accelerated basis to bring the first prototype ammonia cracker system, that module that I mentioned earlier, to fruition, and the potential of putting that into a customer site or a partner site next year, with, as I said earlier, the revenues starting to show probably from around 2025. Of course, that means developing new partnerships. I can say, for example, this week we have 2 very large organizations coming to visit us who are very much interested in the ammonia cracking technology for pilot projects in the next year or two. So, we're not talking many years out, but we're probably not looking at any revenue recognized in the current year. So that's the presentation. Very much like to open to questions.
That's great, Peter. Adam, thank you so much for updating investors. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review some of the questions you submitted, I'd like to remind you that recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. Peter, Adam, as you know, we received a considerable number of questions ahead of today's event, and we've also received a number of questions throughout today's meeting. So you very kindly put some of these into themes to try and address a lot of the content that we received. One of the topics that was largely covered was around ABB, and I know you've covered a lot of the content throughout the presentation, but perhaps one question is ABB involved in any of the future development?
So ABB are a shareholder, they are a customer, and we're working with them to define the product specifications that we are currently developing. The announcements that we've made have been focused on the e-mobility part of the ABB value chain or proposition, but equally we are meeting on a regular basis representatives from the maritime team and from the backup power team. I'm actually traveling to Switzerland later this month to meet with a number of their team in Switzerland. So yes, they are involved in the development of the technology insofar as it relates to customer use cases. and they're supporting that development program. But as Peter alluded to earlier, in no case are we looking at sort of any form of selling or licensing of that technology through the development roadmap.
That's great. Thank you very much indeed. Turning to sales, really, a few questions around that, if I may. When do you expect construction companies or lease companies to start placing orders for multiple systems?
Well, obviously, we've got to be very careful of what we say in a public forum around sales projections and the like. What I can say is, I mentioned it, sort of alluded to it earlier, that the work that we have done and the investment we've made in substantiating the relationships in the construction industry with the constructors themselves are now starting to see discussions open up with plant hire businesses, and so some of those discussions are going very well at the moment, and we would hope to be able to see evidence of that in the near term. Obviously, we don't control those timelines in the sense that there's two parties to any conversation, but the evidence base that supports the transition happening sooner rather than later is now very clear. I don't know whether Peter had any comments on sales, in terms of projections.
No. I mean, the only thing that's worth adding is obviously we work through our house analysts, and we're getting a lot of incoming from other analysts who are keen to cover us. This space is growing in interest, and more people are following us. So the information is getting out there, but by working through our house analysts, everything's in context, and rather than talking, absolute numbers and our customers, frankly, using that information to drive our prices down, or even competitors using it to sort of come in and steal our business. So that's the best way, really, we find, to communicate with the market is through our house analysts, and as more and more people come on board, to follow them, read their notes. They put a lot of effort into getting those notes right. So that's usually a good place to look as well.
Thanks, Peter. Just turning to the next question, what's the roadmap and time frame for developing and selling ammonia crackers, and what are the biggest barriers?
Right. So I think we alluded to that earlier in the presentation. I think we launched a technology platform, and we're very specific in referencing the platform rather than the product. And so now, having sort of established the evidence base to support the technology, we've been working on this for years. We're now looking at the productization of that. So we shouldn't be expecting revenues like today in terms of sales. That we've said in announcements, and I mentioned it earlier, 2025 is when we would expect to start seeing revenue from systems being deployed on customer sites. That could be accelerated through some of the conversations we're having, but I'm certainly not going to hang my hat on that. I think the ammonia cracker and the barriers to entry, ammonia, at the end of the day, there's a toxicity associated with that. So you need to make sure you bring health and safety along with you. We're bringing governments along with us. We're starting to see a lot of that regulatory support for ammonia in the maritime industry, in the industrial markets. And again, as it is the second most produced chemical on Earth, ammonia is a well understood chemical despite its toxicity. So I think we're not going to see an ammonia cracker sitting in everyone's home anytime soon. That's certainly a step too far. But breaking into the industrial market should be a slightly lower hanging fruit. But having evidence bases to support it working, we're starting to invest in an ammonia test facility here in the UK, and that test facility will support a number of the scale up initiatives and prove, I guess, the evidence base, or provide the evidence base to support the health and safety aspects of our cracker technology.
That's great. Keeping in on the sales theme, what are the critical success factors associated with achieving your goal of securing the first volume order into a plant hire business in 23?
Well, so I guess the successful factors that we're looking at, or the critical success factors, that we're looking at is really having plant hires confident and comfortable that they can put these systems in the market, charge a margin on those, and we're demonstrating what type of pricing you can achieve from a rental model at the moment. Obviously, we don't disclose that for reasons that Peter mentioned, and the availability and cost of hydrogen, the fuel. At the end of the day, the availability of hydrogen and the cost of hydrogen is a key driver for the economics of our systems relative to diesel. And I can say that, looking at the UK market, hydrogen is still a premium gas. But for example, if you look at buying hydrogen in the UK at the moment, you're probably looking at 20 to 25 pounds a kilo. I know that we were quoted in Spain 6 to 8 euros a kilo. Obviously, at 6 to 8 euros a kilo, you're going to be much more economically viable than at 25 pounds a kilo. So we're starting to see the UK market hydrogen prices fall. We're starting to see the availability rise, but that has to be seen and understood by the plant hire businesses in order to deliver on the contracts that we're talking to them about at the moment. But we don't see that necessarily as an obstacle to getting them into the market and moving forward with sales and deployments. But it obviously drives some of the timeframes. I think importantly for some of the plant hire businesses and even AFC, I'm not suggesting we're going to become a hydrogen generator. That's not our intention. But you are able to, if you're a plant hire business and you've got a critical mass of hydrogen fuel cell generators in your fleet, you can always manufacture your own hydrogen and mitigate some of those availability challenges that might exist in a broader value chain context. So these are all the conversations we're having. I would say, and again, I'm sort of alluding to some of the questions that may be coming through on other contracts, but we're continuing not just in the UK. We're maintaining relationships in some of the other regions. We're moving forward with a number of those relationships in the other regions, particularly in the Middle East. We've announced projects and MOUs with Saudi organizations such as Altaka. Those conversations are still live today, so I don't want to give the impression that this is just a UK focus. But I think for us that is clearly a low-hanging fruit for AFC Energy.
That's great. Thank you, Adam. And for the benefit of obviously the investors on the call, we did schedule the call for now, but we will continue to go through these questions around topics on manufacturing, share price, funding, and maybe a couple of other topics. But I'm mindful of your time also. If I may just turn to the board questions. We had a number of questions relating to the board. One of them follows is, I'm concerned about the lack of diversity with only one female board member and no ethnic diversity. Is this something that the company is looking to change?
Look, the company has spent a lot of time in the last 12 months looking at its ESG credentials, its environment, social, governance credentials, and part of that is very much about driving diversity. Absolutely factually correct. We have one female on our board, joined us a year or so ago, and we're certainly as a company looking at diversification not only at board level but across the entire business. And so we're starting programs we're looking at programs of work of going out and speaking with academia, with schools, trying to drive more women into engineering, into science. We have a relatively good percentage of females in terms of the gender diversity in our science teams, slightly less or more skewed towards males in the engineering teams. But we're certainly keen to make the workplaces as diverse as possible, and that's from board level down. So yes, we are continuing to look at that, and in some cases we're certainly putting some very clear actions in place to deliver it.
That's great, thank you. Turning to profitability, what sales volumes and revenue do you expect over 23 and 24, and when do you expect to reach break even in terms of what you can say in this forum?
So I think I sort of refer back to my earlier comment about working through our house analysts. The other thing to keep in mind, I talked you through the slide on having this sort of sequential product rollout. And of course, so what will happen is, we'd expect the air-cooled to start sort of generating those sort of margins before liquid and indeed before fuel conversion. So, it's worth thinking in terms of breaking even on products, remembering there'll be some sort of weighted average, but it's sort of down track and it rolls out over the next sort of 3 to 5 years. But in terms of public guidance, that's how we're working is through our house analysts.
That's great, thank you. If I may turn to technology, why after the announcement of the Alchemem membrane technology was there no progress with OEMs? If it is better than existing technologies, why has it failed to generate any OEM contracts?
Sure. So the Alchemem membrane, which we have spoken about in previous years, that work had seen the membrane go out to a number of OEMs. It was tested in a number of their own sites and laboratories and so forth, and received very, very favorable feedback. I think the appointment of our new Chief Technology Officer in particular, who has a very strong background in membranes, identified some of the work that we still needed to do in order to commercialize these bits of equipment or this technology, in terms of longevity testing, in terms of scaling some of that manufacturing processes up. And in speaking with some of the OEMs that we were engaging with, they were talking about product development lifetimes of 5, 6, 7, even in one case 10 years before we were seeing any substantive sales of the membrane into an application. And one of those applications was electrolyzers, for example. So as a management team with a new technology team in particular, we took the decision that if we believe, and we generally believe, that the construction market and others in that that we've talked about today are ready to move towards commercial sales now, then investing and focusing our limited resource or capital resources on technologies that might only see deployments in 5, 6, 7, 8, 10 years was probably not the right focus for the company at this point in time. We, of course, still maintain all of the work and IP in the Alchemem products that we were developing. We're continuing to work on those products. We're working with some fairly internationally esteemed scientists and academics in that space who are giving credibility to what we're doing. But in terms of and we mentioned it in the annual report this year, that we decided to deprioritize it in favor of supporting a higher level of deployment of commercially available systems and capture that first mover advantage into some of the markets in which we're targeting. I do get asked the question, did it not work? No, of course it works. We're working with some companies and some of those companies have been quoted in RNSs that we've released previously. So it's not a case of does it or doesn't work. It's just a case of we could do a lot of things as a company, but at the end of the day, we do need to focus, and some of that focus is reflected in the timeline for revenue that Peter highlighted earlier. And that focus today is on commercialization and deployment of the air-cooled system into the construction industry.
Okay, thank you very much indeed. I'm just going to turn to manufacturing and then I'll ask you a question around the share price, but I'm mindful that people might have follow-on meetings, and I know that you certainly have a presentation post this call. So regarding manufacturing, how many power towers / crackers will you be able to produce during 23 and 24?
So again, we haven't guided externally. That's very much work in progress. And remember that manufacturing is a whole skill set in itself, and our manufacturing strategy is what we're working on. So clearly, hitherto, everything has been done in-house. We've got some great facilities down here at Dunsfold. We've got plenty of room, etc. But everything is finite. We've got a lot of experience in-house with outsourcing, using contract manufacturers. And of course, the beauty of contract manufacturers, if you get it right, is you get to borrow their scale, you get to borrow their balance sheet and their systems and processes. So that's sort of where we're working through. So we don't see ourselves as being constrained. We're not about to, go and spend a very large amount of money on a big, bright, shiny factory. And we certainly don't need to do that before we scale up. So I think over time we'll guide on that as our strategy sort of solidifies. But on the power towers, and there was another question in there about how much do the power towers cost, how long do they take to manufacture? The answer is too much. They cost too much and they take too long to manufacture, and that's another reason why we've not returned to the drawing board, because the modules remain the same. But why we've got this different form factor, why, as part of the Acciona process, we've looked at the cost savings. And the sort of the typical manufacturing approach, and we expect to follow this, is your first article, you take that, and the next one you drive out 50% of the costs, and then you do it again and you drive out a further 50%. So you reduce your cost by 75%, and the rest is all about scale. So there are still plenty of opportunities for driving out costs. And one example of that, the power tower at the moment, if you look inside, a lot of the connections, they're sort of manual connections, and there's a real person with a real spanner turning nuts and bolts. There are what you call click lock connections, and that applies in both the electrical connections and the hydrogen connections. And of course, the more of these click locks we can use, the quicker it is for whoever is assembling these things to put them together. The plug and play concept. So this is all developing. The important thing is we have the skill set in house to source the right manufacturers if we go externally, or indeed work if we go internally. Invariably, my prediction is we'll end up with a hybrid, particularly around areas of sort of sensitive IP. With IP know-how, you can only protect it to a certain degree. It walks out the door at the end of the day. So that's where we are, and it's all part of scaling up, and it's all part of getting that scaling up right. And we do the work today, means we get it right tomorrow.
That's great. Thank you very much indeed. Well, look, let's finish off a question I'm sure close to everybody's hearts around share price. I'll summarize it in one. Why is the share price so low, and what is it that you think you can do to address it?
Well, certainly, communication like this hopefully is a step in the right direction. Look, it's a difficult one to answer at a micro level, and that's not to deflect the question. But if you look at the UK capital markets, I heard the other day that we've had 21 consecutive months where money has net flowed out of the UK capital markets. Growth companies are now being discounted because of higher interest rates and inflation. There's a lot of elements that, if you look at even the macro, even in the industry level, that at a hydrogen industry level, it's a challenge with some of the stocks taking similar, if not greater, hits to their share price than us. I can say that unlike other groups in that space, we are delivering. We're delivering aggressively to meet customer needs. We are putting systems in the field. We are deploying products, earning revenue. And I think if we start to establish some of these larger scale contract opportunities around plant hire businesses and the like, that the share price will certainly see a significant movement over the short term. But at the end of the day, I have no control over that at a macro level. What I can say is that we are seeing some very good buying of the AFC share from institutions. We know there's several institutions who are buying at the moment and are continuing to buy at the share price, so accumulating their position in advance of the hockey stick curve. So we are confident that this is more macro driven than the company. We've hit all of our milestones, and you'll see more revenue hitting the books very soon.
That's great. Adam, Peter, thank you very much indeed for your presentation and for answering those questions. And thank you to all the attendees for your engagement this afternoon. And the company will review all these questions. And if there are any additional responses to be published, we'll notify you by email when they're ready for your review. Adam, Peter, I know that investor feedback will be important to you both, and I'll shortly redirect investors on the call to give you their thoughts and expectations. But before doing so, perhaps just a few closing comments.
Look, thank you, Mark. I appreciate the opportunity to present to our shareholders today, and I know there's a number of on this call who are not shareholders yet, and hopefully this will change their opinion. But as I said earlier, I think we have achieved a tremendous amount. Certainly in the years that I've been at AFC, we've achieved more in this last year than we have for the almost the entirety of the time beforehand, and that comes about by firstly, the fundraisers that we did, bringing in the critical mass of people, bringing in the quality of people we have at AFC. We now have a world-leading expert team of engineers, of scientists who are enabling the types of progress that we're seeing Now, fortuitously for us, that progress is being made at a time and in an environment where the decarbonisation of diesel is growing and is becoming more clear. So we think we've hit the right timing, we've got the right technologies, and now it's for us to deliver on that. So yeah, looking forward to the 12 months ahead.
That's great. Adam, Peter, thank you very much indeed for updating investors this afternoon. Could I please ask investors not to close this session, as it will now be automatically redirected so that you can provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of AFC Energy PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.